Welcome to another stage analysis video. It's Sunday the 12th of January 2025. Lots to get through as always. Going to start off today with a look at some of the watch list stocks. Before I get to that, actually just quick go back. So let's go back one to the S&P 500. So with the market rolling over this week, closing second week below the 10-week moving average here. We're in what we call stage 2B minus. It just means it's late in stage 2. You can see we've had obviously a monster stage 2 run with a brief pause back in a later part of 2023 and again during the midpoint of 2024 here. So rolling over once more, approaching the 30-week moving average, but still above that at the moment. But you can see the percentage of stocks above their short, medium and long-term moving averages has now rolled over and dropped down to around 39% at the moment. So it's the lowest point we've seen for that in the last year or so, and we're starting to move into the weaker portion of the zone. So anything underneath 40% we consider weak, 40 to 60% is in the neutral range, and then 60% and above is in the strong range. So it rarely got into the strong range for the entire market in the last year. So we had a brief bit at the end of 2023, but now getting back into the weaker part of the range with that. So coming back to, so with that in mind, with the market rolling over, there's not a huge amount of stocks for the watch list this week, but wanted to start off with CRDO, which has been running strongly throughout the year. Go to the weekly chart and actually come back to through the stage analysis charts here on the screen up. So you can see it's been running in stage 2 for quite a while now, and we've tightened up within the last month or so at the highs. So SATA score has dropped from a 10 back down to an 8, which is a normal score when it's in stage 2. You can see when it's running higher in stage 2. So around, this was the last time it moved out into stage 2 from here. You can see the SATA score. This is the bottom end down here in the 6 to 10 range for the vast majority of this stage 2 advance through here. We had a brief pullback at this point through here where it started to drop down, and that's when this rolled over briefly before starting to recapture that 10-week moving average. So when it's in stage 2, the SATA score tends to be in the 6 to 10 range. So an 8 is in the middle of that range at the moment, but we do, as you can see, get drop off into the neutral range during that time. Compared to its group, semiconductors here, it's actually one of the stronger stocks in the group. You can see from the group chart here. So that's now in what we call stage 4 minus. So it started to roll over into stage 4 a little while ago here, and then it's pulled back into the 10-week moving average and rolled back under again. So quickly have a look at that on the broader chart here, and you can see from the group, while it has been, semiconductors did have a pop up in the last week or so and broke out. They've come back into the range again. The percentage of stocks above their 30-week moving average in the semiconductors still a reasonable 50% level here. So you can see the group as a whole, a bit more of a mixed bag with the biggest stocks, a few of them still holding up: TSM, AVGO with strong scores, and Nvidia now on a neutral. If we look at this from the bigger stocks from this, so we get the big 10 charts, you can see that's actually in a stronger position, which is still in, what we got there? It's in stage 3, so it's, whereas we're in stage 4 minus for if we look at this one as it's rolled over, we're back into stage 4, actually rolling back under the line there. So again, coming back into the chart, if we go back to the daily chart. So I wanted to zoom in on what's going on at the moment. We've got the earnings results back at the early part of December there, and then we've started to form this sideways structure. So if we zoom in on that, drop down to a 2-hour chart on a daily chart with a volume profile on the side, mark this structure. You can see at the moment we had a little short-term selling climax, automatic reaction, secondary test, a bit of another secondary test at the bottom of the range, an up thrust, and then a test, and then roll back under here. You can see we had a significant bar, further significant bar down here, but then it actually made a higher low. So we started to have characteristics of a distributional structure, your classic Wyckoff distribution structure, but never completed to the downside. Started to pull back in again with slight higher high, and then you can see we've made higher low, and a higher low again. We started to push back out of the range again, and now it's sitting back in, tightening up. So a little bit of VCP type action on the short term on this one, tightening up in here. The volume during the obviously Christmas period lightened up as you would expect, so this increased volume here not necessarily showing an increase. It's just that this period here is a particularly dry period for volume anyway, so not trying to read too much into that at the moment. So we've got a distribution structure that's turned into a potential reaccumulation, so looking for continuation move to the upside. Ideally see a strong volume move, break to the upside from the structure. You can see from the volume profile down here, so this is the main area, this bit through here, so we'll just redraw that. So this is your zone of potential support with this one. So if we do attempt to play this, then obviously stop losses would be somewhere under this area, although from a percentage basis that's quite a ways back down. There's still a 8 or 9% move to get back down there, but that's the zone of liquidity through there. Coming back to the daily chart, just sitting around the 180R level at the moment. Okay, let's move on to the next one, FRO line, or front line. So highlighting this as what we call a stage 4 minus attempt, and it's not just this stock. There's a bunch of stocks this week from the transportation stocks, marine transportation and oil and gas tankers, that have been running a little bit of what we call a change of character. They were in a short-term downtrend in stage 4. If you look at a weekly chart, because it was in a stage 4 decline, and we've moved back through the 10-week moving average in the short term. So this is happening on multiple stocks within the group. So a little bit of a change of character going on. It's one of the early, well, it is the earliest entry point in the stage analysis method when you're trying to, from a swing trader's perspective, starts to come back through that 50-day moving average, and you're looking for a move up towards the 200-day moving average. If it doesn't make it all the way back up to that area, it starts to roll back over quickly, comes back under, then you would immediately obviously lose interest at this point and get back out through here. But this is the potential earliest entry zone with the stage analysis method, long before a stock gets to stage 1 and stage 2. So playing the rebound from the lows back towards the 30-week moving average and 200-day moving average. So again, looking at this on a weekly, so 30-week moving average at the moment back up at the $20 level currently. So that would be the sort of target zone in the short term for this. But as I said, multiple stocks in the group, so this is highlighting these more as a group theme, a bit of change of character going on in the oil and gas tankers. As we saw in the last week or so, the energy stocks starting to move higher as oil itself made a stage 2 breakout last week. So the USO, for example, you can see starting to pop to the upside, started to move out into the early part of stage 2 again. Get a weekly chart up on that. So just breaking through for the last few weeks here. Next up, PSTG. So this has been tightening up now for the last month. Had I believe it was an earnings reaction move, still within the structure here. So a little bit of a apex triangle type look to this one at the moment. So popped up into early stage 2. Again, if we go to a weekly chart on this, you can see tightening up through here after moving to stage 2, broke above the significant bar area with that move. So it's been sitting just above that. Come back to the daily chart. If we drop down to again a lower time frame, such as the 2 hour, can do the same process again. You've got your earnings gap up bar to that high. So you've got a little selling climax into automatic reaction and secondary test. It did undercut a little bit, come back in again, a little spring type action. But again, this one has been tightening up a little bit higher lows as it goes, but also what we call an apex through here. It's starting to triangle move. It's just a little bit of contraction going on, so volatility contraction to a certain degree, not a huge amount, so still 4% or so to the previous, from where it is currently to the previous swing low here. So it's not a huge volatility contraction, but definitely a change of behavior here, and we're looking for a pop to the upside again on this one. If it starts to break this area back through here though, that would negate this, and it would start to potentially roll back over and could easily turn into stage 4 on that lower time frame, and on this time frame that would move it to what we call stage 2 minus, as the 50-day moving average is still here. So looking for a move to the upside and out with a continuation. We go to the weekly chart, that would push it back up towards the $70 level, potentially higher there.